Hello dear students, in this video we are going to see the problem of journal entry. How to make the journal entry from the given transactions that we are going to see in this video. Myself Professor Vaishali Bharat Gholam. First transaction is cash purchase of rupees 2000 from Nike. Okay, what is the step of recording the transactions into the journal is first of all we have to identify which two accounts involved in these transactions. Second step, we have to identify which type of account it is, either personal, real or nominal. Then apply the rule and accordingly we have to make the entry either on debit side and on credit side. Okay, that is the steps of recording the transactions in a journal. First transaction is a cash purchase of rupees 2000 from Nike. Which two accounts involved in these transactions? See, good and cash. What is purchase? Goods are purchased and second account is cash. Okay, these goods are the type of real account and cash is the also real account. What is the rule of real account? Debit what comes in and credit what goes out. Accordingly, goods are purchased means goods are coming into the business. That's why goods account is debited and cash is going out of the business. That's why cash account is credited. This is a journal entry of this transaction. Date 1st January. Particulars goods account DR ledger folio debit rupees 2000. Then to cash account credit rupees 2000 and short explanation about the transaction is being cash purchased from Nike. This is we call it as a narration. This is the journal entry of this transaction. Cash purchase of rupees 2000 from Nike. Then second transactions on 2nd January or credit purchase of machinery from MN Cooperative rupees 5000. Which two accounts involved in these transactions? Machinery and MN Cooperative. Why MN Cooperative? Because this transaction is on credit basis. That's why we have to write down MN Cooperative. Machinery account is a type of real account. MN Cooperative is a type of personal account. What is the rule of real account? Debit what comes in. Machinery is purchased means machinery is coming into the business. That's why machinery account is debited. MN Cooperative is a personal account. Here MN Cooperative is a giver of machinery. That's why MN Cooperative account is credited. This is the journal entry of this transaction. Credit purchase of machinery from MN Cooperative rupees 5000. First of all, we have to write down the date 2nd January. Particulars machinery account DR ledger folio debit 5000 to MN Cooperative account credit rupees 5000 and narration is being credit purchase from MN Cooperative. Third transaction is paid office rent to the landlord Shinde rupees 500. Which two accounts involved in these transactions? Rent and cash. Rent is a type of nominal account. Cash is a type of real account. See, paid office rent to the landlord means rent is a expenses. And what is the rule of nominal account? Debit all expenses and losses. That's why nominal account is debited. Rent account is debited. Cash is paid means cash is going out of the business. That's why cash account is credited. Cash is going out. The journal entry of this transaction is paid office rent to the landlord Shinde rupees 500. Date 3rd January. Particulars rent account DR rupees 5000 to cash account CR 500 and narration is being office rent paid to Shinde. This is a journal entry of this transaction. Paid office rent to the landlord Shinde rupees 500. Fourth transaction receive commission rupees 200. Which two accounts involved in these transactions? Commission and cash. That's why cash as receive commission means cash is coming into the business. Cash is a type of real account. Rule of real account is debit what comes in. Commission is a type of nominal account. Here receive commission means this is income. Okay, and rule of nominal account is credit income and gain. That's why commission account is credited. This is a journal entry. 4th January cash account debited rupees 200 to commission account credited 200 narration being receive commission. Fifth transaction Borrow rupees 1000 from Madhav. Which two accounts involved? Cash and Madhav's loan. Because money is borrowed from Madhav. That's why Madhav's loan. Cash is a real account. Madhav loan is a personal account. Here borrow cash means cash is coming into the business. As per the rule of real account is debit what comes in. That's why cash account is debited. Madhav's loan is a personal account, type of personal account, and rule of personal account is debit the receiver, credit the giver. Madhav is giver of loan, that is cash. That's why Madhav's loan is credited. This is journal entry of this transaction. Borrow rupees 1000 from Madhav. 5th January, cash account debited 1000. To Madhav's loan account credited 1000. Narration being borrowed from Madhav. 6th transaction. Typewriter of rupees 2000 is stolen. Which two accounts are involved? Loss. As stolen means that is loss. Loss account and typewriter. See, loss is a nominal account and rule of nominal account is debit all expenses and losses. That's why loss account is debited. Typewriter is a type of real account. Rule of real account is credit what goes out or decrease in assets. That's why typewriter account is credited. This is a journal entry of this transaction. Typewriter of rupees 2000 is stolen. Date 6 January. Loss account DR 2000 to typewriter account 2000 credited. Narration loss typewriter. 7th transaction is return goods of rupees 1150 to Nike. Which two accounts involved? Nike and goods. Okay. Nike is a type of personal account, goods is a type of real account. Return goods of rupees 150 to Nike means goods are going out of the business, that's why goods account is credited. Nike is a personal account rule is debit the receiver. Okay. Journal entry 7th January, Nike account debited 150 to goods account 150 credited. Narration is being goods returned to Nike. 8th transaction is deposited cash with bank rupees 1000. Which two accounts involved in this transaction? Bank and cash. Here bank is a type of personal account, cash is a type of real account. What is the rule of personal account? Debit the receiver. Who is receiver of the cash? Bank. That's why bank account is debited. Cash is deposited into bank means cash is going out of the business. That's why cash account is credited. Journal entry of this transaction. Deposited cash with bank rupees 1000. Date 8 January. Particulars bank account debited 1000. To cash account credited with 1000. Being cash deposited with bank. Okay. Ninth transaction. Paid college fees of the proprietor's son rupees 250. Which two accounts involve? Drawings and cash. As business cash or company cash is used by the owner of the company for personal use. That's why one account is drawings account and another is cash account. Okay, drawings account is a type of personal account and rule of personal account is debit the receiver. And cash is a type of real account as cash is withdrawn by the proprietor for paying the college fees means cash is going out of the business. That's why cash account is credited with rupees 250. This is a journal entry of this transaction. Paid college fee of the proprietor's son rupees 250. Date 9 January. Particulars drawings account DR 250. To cash account credited 250. Narration being paid college fees of the proprietor's son. 10th transaction is rent due but not paid rupees 500. Which two accounts involved? Rent due but not paid rupees 500 means rent and outstanding rent. Here rent is a type of nominal account. Outstanding rent is a personal account. Rule of nominal account is debit all expenses and losses. Rent is the expenses, that's why rent account is debited. Outstanding rent is a type of personal account. Rule of personal account is debit the receiver, credit the giver. Outstanding rent account gives the benefit. That's why, or rent is payable, that is liabilities increase. That's why outstanding rent account is credited. This is a journal entry. 10th January, particulars under rent account debited 250 to outstanding rent account is 250 credited, being rent due but not paid. This is the narration of this transaction. This is all about the journal entry of the 10 different transactions. This is the total journal entries of the 10 transactions. Date, particulars, LF, debit and credit. At the end, we have to make the total of debit and credit, that is 12,350, 12,350. Thank you.